Hello, good afternoon, guys. Thank you for joining us today, taking your time, appreciate it. My name is Julia Sosa-Rocha. I'm a real estate broker with eXp Realty, also a team leader with Julia and Associates team. And I will be hosting this buyer seminar today with our preferred loan officer, Chris Womack. So Chris, please go ahead and introduce yourself a little bit, and I'll do the same after.
Yes, hello everyone. I hope you are having a great start to your day. My name is Chris Womack, and I'm actually the owner here at People's Mortgage Lending. And I've been in lending for right about 19 years, and started off working for a lot of the large banks, and then broke off on my own, and had a franchise of a larger company for several years, and then we started People's Mortgage Lending in July of 2021. So we've been open fully on our own for a year, a little over a year and a few months here. And the main goal for our company is we really try to have a feel for the national landscape in terms of mortgage lending, and we pull all the mortgage tools and programs under one roof. So any programs that are out there nationally, we pull those under our umbrella. That way we're a one-stop shop for lending. So any questions you all have at any time, if you just need direction, whether it's credit, whether it's commercial loans, whether it's, residential real estate, we can always assist you in any questions that you have and lead you in the right direction.
Okay, great. Thank you for introduction. So let me share a little bit about myself and my experience. I've been in the real estate industry serving Atlanta metropolitan area for 19 years. So Chris, we're pretty much the time-wise about the same. I started with new construction in the beginning, and for 5 years before market crashed, I've been helping to a lot of buyers to guide them through a home buying process. Then market transitioned. We did a lot of foreclosures and short sales. About 8 years ago, I started my team, Julia and Associates team, and we've been growing ever since. Like last year, we've sold 85 homes. This year, we already hit about 80 homes in sales, and it's not the end of the year. We specialize working with first-time buyers, with relocation companies, luxury real estate market, have helped to a lot of buyers and sellers just on regular transactions. As I mentioned, foreclosures and short sales is our expertise. Not that many on the market. Who knows, maybe we'll transition in some time, but for now I don't see many foreclosures and short sales hitting the market. Market is transitioning. We've been in seller's market for the last couple of years, and I see a little shift. And a lot of buyers are reaching out to us right now, and they want to buy, they need to buy, but I see there is some hesitation. The interest rates continue going up, and it kind of, some buyers are disqualified, some can buy, they are just not sure if this is the right time. That's why Chris and we decided to put this seminar together to educate you, to really show you what programs are available and where we're going, that you can make the educated decision if this is really the right time for you to buy or if you need to wait for a little bit. So we'll share with you information that is available for us, what we see, the shift, the trends, where we are going, and then you can, if you want to schedule one-on-one consultation with us. For everyone, the situation is different, and we would like to analyze and see what is going on, what your real estate goals are, where you're going, so that we can better assist you. Okay. So Chris, please tell us, what do you see on the market? What trends and shifts you've experienced in the last couple of months?
Well, so of course, the biggest thing is that, interest rates are rising right now. I think that's not really secret probably to anyone who's out there, looking online or has any knowledge or any insight into, mortgage or the real estate industry. Interest rates have went up pretty much every month this year. We're now at a point where interest rates on average are right about 7%. Interest rates started out in the beginning of the year, right around 3.5%. So interest rates have climbed quite a bit. We were still in the threes in January, and now we're up to 7%, and depending on credit score, into the sevens. So interest rates is the biggest change. The thing that people really have to understand is that, we're not in a housing crisis, nor are we going to enter a housing crisis. I think, people are thinking that, back in 2006, when the first market crash happened, in the most recent 20 years, that we're hitting that again. And, we're going to see massive foreclosures and massive reduction in property values. And it's simply not the truth. It's not going to happen. Home values are going to continue to go up. They're going to go up every year. I'm not saying that you won't see a level off in home prices, but truly, in most markets, home prices are finally getting to the price point of really where they should be. And that's what people have to understand. Those home prices are not going anywhere. So anyone who is waiting to invest, you're really making a mistake. And what you have to understand right now is we're trying to educate buyers that this is your market to take advantage of, because you're seeing at least some slowdown in movement of homes. In terms of, you may see a home now that's sitting for a few days. Earlier this year, all of 2020, all of 2021, no home really sat longer than a few hours. So now you're getting some homes that are sitting now again for a few days, but it's mainly due to just the interest rates, people who are, somewhat hesitant to purchase. But what people have to understand is, you may have to take a higher interest rate and buy now while there's opportunity. But what the consumer has to understand, the interest rate that you're taking today is not a lifelong, it's not a lifelong commitment. You're taking an interest rate today, but you'll be able to refinance, tomorrow, so to speak. I mean, interest rates are 100% going to fall at some point in 2023. They're going to come down. They have to come down. Likely interest rates will probably climb over the next 2 months, probably maybe January and maybe some into December. But at some point, 2023, they're going to have to taper the interest rates back down some. We may end up hitting 7.5 or 8.5%, by the time the interest rates stop going up here at some point in November, December. But in 2023, they are going to come back down. Now, I'm not saying that rates are going to be all-time lows again. We probably won't see 2 and 3% again for quite some time. But you're going to get those rates back to a normal interest rate, 5%, in that range in 2023. So you just have to understand that, if you take a 7% rate today, yes, you may pay 200 to 250 more a month on your mortgage, but this is a long-term commitment. If let's just say your mortgage is $250 higher a month and you pay that for the next 8 months, that's only $2,000. At the end of the day, over an 8-month span, that's not a lot of money. And if you're renting, whatever your rent is that you're paying, you're throwing that away every single month to cover someone else's mortgage. And to rent a nice home, everyone knows it's very expensive today. You're going to be paying whatever number, $1,500, $2,000, $2,500, $3,000 for rent, depending on how nice your space is. So you have to understand that rent is designed to cover someone's mortgage who has a mortgage either on the building that you're renting or the house that you're renting. So you're paying someone else's mortgage. So what people have to understand is when anybody is giving you advice to wait to invest, it's simply bad advice. You have people that are waiting for a hope and a prayer. I hear people say, well, I'm going to wait till next year because I believe home prices are going to come down, and what they don't understand is if home prices came down, it would be a very, very small percent. If home prices came down, let's just say the average home prices fell 3%, let's just say that happens. If you're buying $100,000 property, that's only falling from 100 grand to 97,000. If you're buying a $200,000 property, that's only falling from 200,000 to 194. If you're buying a $500,000 home, that's only fallen from 500,000 to 485,000. So you have to understand that even if that were to happen in the short term, you're not saving money by waiting a year to buy that property, because when you buy that property, you now have immediate tax write-offs. If you buy a property and finance it in 2022, you're able to write off your closing costs and you're able to write off your closing costs, and you're able to begin writing off your interest when you file taxes in 2023. So you have not only the tax breaks, but now you're paying into a mortgage that's creating wealth for yourself. And you're also gaining those months of appreciation that are going to come, those months of appreciation that come every month and every year, because homes are going to appreciate at least some yearly. You know, in some cases, they, you know, some down years, they may only appreciate 1%, you know, and then in up years, they're going to appreciate, you know, anywhere from 3 to 4%. So if you sit for the next, if your rent right now is say, you know, $2,000, and you sit for the next year and don't buy a property, well, you just spent $24,000 in rent, you know, waiting on a prayer that the home prices are going to fall. And I can tell you 100% very, very confidently that home prices are not going to come down. It's simply, the issue is that even if other things in the economy fall, even if the stock market has a certain collapse where we're, you know, in a recession, in a deep recession, the problem with home prices falling is simply supply and demand. There's too many people that want to buy a home that are not able to buy homes even still today. Then you have homes that are coming available in the market. So what people have to understand is that the home prices are not going to fall simply to supply and demand. It's just a simple fact.
Yeah, and Chris, to add to this, I just recently heard that in the next couple of years, we are expecting in Atlanta metropolitan area, they increase in population by 2 million. So these 2 million have to live somewhere. We definitely don't have enough supply of inventory for everyone who is coming.
Right. And I can tell you this, being in mortgage for 20 years, I was in mortgage prior to the first housing crash. And at that time, when we were doing mortgage loans 20 years ago, I can tell you this, I see buyers now every day coming in at 22 years old, buying homes, you know, and that wasn't the case when I started in this 20 years ago. So what people have to understand, people are also growing in their education, in their financial literacy, right? So you don't just have 30 and 40 and 50-year-old people buying real estate. You have 20-year-old people buying real estate today. These kids are coming out of college, they're coming out of high school. They're more educated financially, and they're more educated on how to build wealth for themselves. So they understand when I buy a home at 20 years old, and by the time I start a family at 28 or 30 years old, I've now amassed 100 or 200,000 worth of equity just from the difference of me not paying rent and having a mortgage to sell in 8 to 10 years. So the education is also climbing, and that's what people have to understand. So the supply and demand is what is going to drive those prices up, whether we're in a recession or not. There's simply too many people that are buying. So what people have to understand today, everyone who is not buying today and is holding off because they feel that home prices are going to fall and interest rates are going to fall, they're going to miss their window, because when 2023 comes around, right? Now think about this, when 2023 comes around and when the rates start to taper down, what do you think is going to be the national response? People are going to come out of the woodwork now to get 5% interest rates. They're going to be coming in flocks to come and buy homes. So what's going to happen is everyone who was waiting, you're now going to be in a bidding war. And you're going to go right back to experience what we experienced in the whole last year, is that you're going to want to buy, but you're going to be frustrated because every time you go out to buy, you're now being beat out. Because now anyone in the marketplace, it just simply comes down to money. Whoever is the highest bidder is going to win. So you have people that are throwing $50,000 and $100,000 over the price of homes at that seller. So you have to understand that you have to take advantage in certain markets of getting in. And when you see you're in, you really have to take advantage of that, or you'll end up waiting longer. You know, it's no difference than when interest rates fell to all-time lows in 2020. From 2020 to 20, all the way up until the beginning of this year, there was not only a purchase boom and a frenzy over buying, but there was also a refinancing boom. So the same way that those homeowners who bought during that period, right, at those low interest rates, but also you had people who already owned and refinanced their home at those low interest rates. You have to take advantage of the time. So we're really trying to educate people that now is your time. You don't want to wait, because when you get into next year, it's simply going to be a frenzy again on buying homes. You know, and I bought my last piece of real estate in 2018, 4 years ago, almost exactly, at 5.5%. I didn't get in at a 2 or 3% interest rate. I got in at a normal interest rate in 2018. Rates were normal. They were between 5 to 6% 4 years ago. And I had to buy that real estate and pay a higher mortgage at 5.5%. But then when rates fell at the beginning of 2021, I took advantage of refinancing and was able to refinance at 2.75, which is half of what I was paying at the 5.5%. So that's what people have to understand. Get in now, buy where there's opportunity, because in 6 to 12 months, you're going to be able to refinance that mortgage and save yourself that couple $100 a month off that payment. You know, and it's best to cut your budget now and sacrifice $200 a month worth of your monthly leisure spending, or you know, worth of say a trip out to eat or whatever. It's better to sacrifice that now, because you're going to be able to take advantage of that savings later as you get into 2023.
Yeah. And another thing, what I've noted, because market has slowed down, or we are able to not only negotiate the price a little bit down, we are also able to negotiate sellers' contributions towards buyers' closing costs. And it hasn't been happening in the last year or two. Like whoever was buying, majority of the buyers had to be ready to cover their own closing costs. And when we negotiate right now sellers' contributions, there are some other ways that may be available for the buyers right now, some programs. And I want you, Chris, to go over this buy down program. It's not maybe for everyone, but people who are really concerned about interest rate and trying to stay within certain monthly payment, maybe it is a good solution for them in the time being until the interest rates will go down again and they are able to refinance. Chris, would you please share with us information about this particular program? And
yes.
Let us know how it works and if it is a good option.
So
buyers
yes.
now. Mm-hmm.
Yes, certainly. So you have what's called a 2-1 buy down program. Now, this program is offered for conventional and also VA loans. So if you are a veteran, you are able to take advantage of it. If you are not a veteran, you would need to fit in at least into a conventional realm of financing to take advantage of it. Now, for veterans, you can finance as low as a 580 credit score. If you are conventional, you have to have a minimum of a 620 credit score. So essentially, as long as you fit the mode of being either a veteran or a conventional mortgage buyer, you can take advantage of this. Now, the way this program works, let's just say that, you know, you're pre-approved, you start looking, you know, for a home with Julia tomorrow, you find a home within the next 2 weeks. You know, that's a conventional mortgage. You're going to put down, for example, 5% down payment. And let's say that in those next 2 weeks, the interest rate is 7.25. Say that rate is at fixed rate of 7.25. The way that 2-1 buy down program works is for your whole first year of mortgage, you get your interest rate at 2 points lower than that 7.25. So your interest rate for the first year would be 5.25. And then the second year of the loan, you would have an interest rate that's 1 percentage point lower than that 7.25. So the second year, you would be at 6.25 or 6.25. And then the third year, if you still have not refinanced a loan, you would go to that fully fixed rate of 7.25, and you would remain there until any time that you were to refinance that loan or sell the home. So what this program does is it gives you the ability to pay more of the, you know, normal interest rate pricing, which is 2 percentage points lower, and it would allow you to have time to refinance that loan. So you would have, like I said, 2% lower in interest rate the entire first year. So if you close on a home in December of 2022, you're going to have that interest rate 2 percentage points lower all the way to December of 2023. And then the second year, starting in December 2023 up until December 2024, you would be at a 6.25. And if you reach December of 2024 and you have not refinanced at all, then you would begin making the payments at that 7.25 rate. So this is a great program to take advantage of, because with the rates will come down into next year, and it gives you the ability to then be able to refinance the loan over the next year or 2 years time. So this is really, a great program that everyone really is afforded to be able to take advantage of, not just the veterans, but the everyday consumer that's not a veteran. You're still able to take advantage of this through a conventional mortgage loan, and without, a steep down payment. Now, the way that this 2-1 buy down is covered, it is covered through seller paid closing costs. So for example, Julia would, negotiate with the seller that they would have to cover 2 percentage points of your actual purchase price. So let's just say you were buying a home, that home price is $400,000. The seller would cover $8,000 towards the buyer's closing costs, which that $8,000 is used towards that 2-1 buy down. So it's 2 percentage points of the purchase price to obtain that 2-1 buy down, and it can only be obtained through the seller's contribution. The buyer's not able to bring their own $8,000 to the table to do this, which is really good for the buyer, because really it's not a cost that has to come out of your pocket directly. It's more like financing that cost. But that's in a nutshell, the way that program works. So it's something that, every consumer out there going to buy a home is able to take advantage of. Now, if you're someone and your credit scores are lower, you're a 580, 590, 600 credit score, yes, we would need to get your credit scores up, to at least a 620 to 640 minimum for you to be able to fit into the mode of conventional finance.
Okay. Yeah, in my opinion, it's a good program, and we see more and more listings where sellers are advertising and offering this buyer incentive to help out. So what other programs are available out there, Chris, other than this one?
Now, so that's the main program that's going to allow you a lower interest rate. You do have also, there's of course down payment assistance that you have for those that cannot come up with down payment. So that we do down payment assistance for conventional and also FHA loans. With the conventional down payment, we can cover that 5% down that's required. For FHA loans, we're able to cover that 3.5% down payment that's required for FHA. I always educate our buyers that you have to understand it's not just free money. A lot of people come in there thinking just free money, down payment assistance. You are paying, a premium in your interest rate. So you have to understand when you're getting down payment assistance, normally your rate is about 3/4 or 0.75 higher than the going interest rate. So if going interest rates are, 7.25, you can expect to be around 8% or 8.25 if you're taking down payment assistance. So you do have to understand and educate yourself financially that if you are able to come up with your own down payment, you do come out ahead financially because you're not paying additional interest on that money that you're borrowing. And if you look at the numbers on that money, let's just say you're someone that's buying a $300,000 home, you need down payment assistance. You're doing a 3.5% down payment on FHA. 3.5% of 300,000 is 10,500. So when you pay that higher rate on that 10,500, you have to understand, you end up paying back a little bit over 30,000 on that 10,000 borrowed in interest. So you are better off financially if you are able to come up with down payment through just checking your savings, through your 401k or retirement account, which is a mass percentage of people put money down through their 401k, or you are able to get gifts from direct family members for down payment as well. Or you can have a combination of all, those 4 or 5 things. You can get some from your own, what you're able to save. You can get some from a mom or dad, brother and sister, grandmother, grandfather, or aunt or uncle. And then you can pull some from your retirement account. So you can compile different, down payment assistance avenues in order to, come up with that 3.5% down. So I always educate, our clients that, truly it's not free money. You do want to try to come up with it if you can, but there are some that, simply are living check to check. They're not able with their expenses or with their children. They're just not able to save, lump sums of money. So that down payment assistance is good for, for those clients.
Mm-hmm. Oh, I see quite a lot of business owners who want to buy a home, but there are special programs, what I understand, that are available for the business owners, because some of them, they write off their expenses, their income. So tell us a little bit about these programs that are available.
Yeah, so you have one of the biggest programs for self-employed individuals is we have what's called a bank statements program. So you have a lot of times people are self-employed, they want to take advantage of writing off that income, right? That's one of the advantages of being self-employed. You don't necessarily have to pay Uncle Sam as much, and so many different small business tax breaks and so on and so forth. So what you have is you have self-employed individuals who, let's just say their business, netted 200,000 that year. They write off a lot in expenses and they only claim a positive gain of, say, 30,000. Okay. Well, generally that 30,000 is not going to qualify you for anything or very little in terms of a mortgage payment. So what you have is we can do a loan with 12 months bank statements. So you would produce 12 months of your business bank statements if you have a business. If you have a business, but you don't have business bank statements, because you do have some businesses that people own, but they still have everything flowing into a personal bank account. So you are able to do 12 months of business or 12 months of personal bank statements. And the way that we calculate that income is we average out your 12 months of actual deposits. So let's just say on average, when we break down your 12 months, you're averaging 20,000 a month in deposits, which would be 240 on the year. Okay. So at 20,000 in deposits, we're able to take your income at 70% of that 20,000. So a business owner who's depositing 20,000 a month, that income is looked at as 14,000 a month. Now at 14,000 a month, you are able to buy, very substantial property, for example. So that is a very, very good avenue for those who are self-employed that are discouraged, because a lot of times when you're self-employed, you may not hear of this program, or if you're only calling a straightforward traditional bank, whether it's a Chase or Bank of America, a Huntington, a Fifth Third, any of those, Wells Fargo, you're not going to ever hear about that program. They're going to tell you if you don't have the tax returns, you're just not able to qualify. But that program is something that's been around the industry for years, actually. But you just only have certain lenders who partake in it. Now, for that program for self-employed individuals, your biggest difference is it is a minimum down payment of 10%. Okay, so, or 10,000 on every 100 grand that you're borrowing. So if you're a self-employed individual buying at 400,000, that 10% down is 40,000. If you're buying at 500,000, your 10% down is 50,000, which is not bad. I mean, it's not, you don't have to have 20 or 25% down, but certainly they're also not giving you the 3 or 5% down option of a traditional straightforward home buyer who's qualifying on their tax returns. But for most self-employed individuals, that works perfectly for them because they're saving generally hundreds of thousands a year in taxes, by not, claiming all of that income as a positive gain. Because a lot of times you have business owners, and even if they're only making 100 grand a year in their business, right? If you're writing all that off to zero, you made 100 grand and brought in 100 grand. So you made 100 grand and brought in, $8,300 a month in cash on average for the 12 months. If you would have had to pay taxes, you're going to pay 42% of that to Uncle Sam. So you're going to go from 100,000 in revenue to 60,000 in your bank account, which is only $5 grand a month as opposed to 8,300 a month. So you're saving $3,300 a month. So it's very substantial. It works for most business owners, and most of them are very happy that they can get in with 10% down on a bank statements program. So keep that in mind. That's something that, we are able to offer as well.
Great. And have a lot of first-time buyers. Do you have any programs that are available for first-time buyers?
So the first time buyers, they really fall under what I was speaking on the down payment assistance. You do, for that down payment assistance that we were speaking about, you do have to be a first time buyer.
Okay.
The two first time buyer programs, of course, if you are a veteran, you're going to get 100% financing through VA. VA gives you 100% financing. You don't have a down payment. You also have conventional. Their first time home buyer program is as little as 3% down. You probably haven't heard that at too many banks because you don't have a lot of banks directly that partake in that. But the actual government conventional guidelines allow you to put down only 3% when you're a first time home buyer for conventional. So you can get in as little as 3% down. And then FHA, you're able to get in as first time buyer with as little as 3.5% down. So very small down payment, you're able to get in on a conventional or FHA loan as a first time home buyer. And then as we talked about before, if you're someone that can't come up with that down payment, then we would compile that with a down payment program option. That way you're getting in at 100% finance.
Okay. So, and I don't know if any of our participants are maybe teachers or firefighters, or there are special professions. I think they also have special financing available for them, correct?
Well, I can tell you that, honestly, to be honest with you, that is a myth. They don't give you better rates because you are a teacher or firefighter. What you have is this, and you'll see this everywhere. Banks will promote that, and they'll say, if you're a teacher or firefighter, they call it the Heroes Program.
Yes.
But they promote it and they tell you that you get a quarter off in rate. But what I'm trying to tell you is truly that's just honestly a manipulation on numbers. The rate that they're giving you, for example, let's just say the going rate in the market is 5.5%. Well, when you come in, banks are given a rate by the federal government. All right. And as owners of banks, when we come in, we get the federal government rate pricing. So generally when rates are 5.5%, it is being passed to us at 5%. It's not given to us at 5.5%. We're getting the raw wholesale pricing, and then that it's marked up to make money, right, to the consumer. So what banks do, they really are not giving them a special provision. They just market that you get a quarter off in pricing. So, when rates are 5.5, instead of them giving you 5.75, you're going to get 5.5. Or instead of you getting 5.5, they're going to give you 5.25. So truly, that program is really a myth. It can be done at any financing institution, is the reality. It's not a set government program or anything special that's in the marketplace for Heroes. It's simply just a bank telling you that you're getting a quarter off in pricing. But what you find, you may go to, let's just say you go to Fifth Third, and they tell you, okay, for our Heroes program, we're giving you 5.25%. Well, you may go down the street to another bank, or you may come here to People's Mortgage Lending, and we're quoting you a rate at 5.125. It's just simply that, they're really not truly giving you a break in rate pricing. They're just not putting as much markup necessarily on that rate. So it's not truly a real program that's actually out there in the marketplace.
Thank you for explaining. You see, it's good to know all this ins and outs. And
right. Right. And that, that's just honesty. And, a lot of owners won't tell you that, but it's the truth. It's not really a true program that's out there in the marketplace at all.
Okay. Got it. So I think like you gave a good overview of the programs. Let me tell a little bit about the process and educate our buyers how the process looks like. Yeah. So first, when we maybe I will share the screen. There is a roadmap that I wanted to show to our client. Let me see if I can share the screen. Share screen. Share. So let me know if you can see it. Can you see it, guys, on my computer screen? Okay, good. So first, we, of course, like to start with preliminary buyer consultation when we meet either face-to-face or we are doing the online Zoom meeting with our clients, and we go over the process. Like for majority of buyers that I know of, it's a very emotional process, and sometimes it can be it is exciting process, yeah, but it can be also stressful. So my advice to you, it's so important to find the right professional realtor who has experience and who will have your truly best interests in mind, because there are so many steps throughout this process, from the beginning, from the home search until the end, that can go wrong. So if you're dealing with the agent who really has a little experience, or just who is so busy or doesn't really care, like, a lot of things can go against you. And one of the major things, like if transaction falls somewhere in the middle, I've seen where buyers can lose their earnest money. So first of all, find the right expert who will help you to find the right property, negotiate the best price and the best terms. It's not only negotiating the price of the property. The right professional, they know how to prepare the contract with all the terms that will set your offer apart, especially if you are in the multiple offer situation where there is a competition. Still, there are some transactions where we see multiple offers, and in order to be a winner, you need to present a strong offer that will actually be set apart from all other offers. Yeah. And there are some contingencies when we usually like to put protecting our client's interest. First, it is due diligence, where you will do all your inspections. There is like home inspection, termite inspection, radon, asbestos, structural engineering. So all these inspections are available, and we are connected to the right like inspectors, experts who will do the right inspection, like finding if there is anything wrong with the house. And during that process, we will help you to negotiate that the seller will fix it, or will have enough time to back out. Okay. You will be also protected by the appraisal contingency period. You will be protected by financing contingency. In case if home doesn't appraise, or in case if something goes wrong on the financing part, your earnest money has to be protected, guys. Okay. Another thing that we do, we supervise the transaction. When we send the contract, executed contract, to the closing attorney, they pull the title. We make sure that the title is free and clear. Also, there are some negotiate, like the closing attorney has to submit the paperwork and order the HOA letter if community has the homeowner association. Yeah. We are supervising, making sure that everything has been ordered on time. So when we bring the transaction to actually closing, there are no delays on any parts of these steps of this roadmap that you can see that will not delay the process. Okay. And once we come to the closing, I always recommend to my clients, because there is so much fraud that is taking place right now, make sure that any communication that you are getting from the closing attorney, especially when it gets to the wiring, the either earnest money or the money for the down payment, that you are sending to the right account. Double and triple check, guys, because I've seen when consumers are getting the emails from the closing attorney, yeah, but it is actually fraudulent email that it was sent by third-party individual. So make sure to call to the closing attorney, make sure that you receive the right wiring instructions, that you are sending your money that goes for this transaction to the right closing attorney, not to someone else. Yeah. So this is kind of the roadmap that I wanted to share with you real quick about what you should expect to to see on the buyer side throughout transaction. Make sure to find the right buyer's agent, because there is also a listing agent who is representing the seller, and they owe fiduciary responsibilities to the seller. So if you think that you can go to the listing agent and save some money on the commission, be careful, because listing agent will be, first of all, protecting and representing the seller and protecting their best interest. And you need to have someone who will be negotiating and protecting your interests throughout the entire transaction. Okay, so I think like we have 15 minutes left. I want to open the conversation right now and see what questions do you have for me, for Chris, so that we are able to answer. I can either unmute you, just raise the hand, or you can type your questions in the chat. Okay, and I will see like who is, if any questions received via chat, I will read it and we will answer it for you. Don't be shy, guys.
Can we ask in verbal?
Yes, sure. Go
Okay, if right now I have a home in my neighborhood that was asking $472.
Okay.
They sold it for $485.
Okay.
And so we're still in a market where there seems to be a lean toward the seller because of the inventory. I have my own house that I'm considering possibly selling. I probably have about $40,000 worth of things that I want to do, to like to redo the roof and the siding. Because he was able to get above his asking price and the market is still strong in my community, I'm trying to figure out, is it more practical to fix those things or to roll the dice with the expectation that someone's going to pay me as close as my asking price as possible because of the lack of supply?
So if and it really depends on the area. It sounds like your property is in a good neighborhood where homes are selling and the demand is strong, right? So in your case, I would say, yes, go ahead. I would recommend better invest the money, fix it, because you will be able to get more money this way versus like putting the property on the market in the condition the way it is. And then buyer will try to negotiate and bring the price down because you need to replace the roof, siding, and maybe some other minor things that most likely you will find a contractor who will do this work for you for good reasonable price versus buyer trying to negotiate and squeeze every penny from you.
The one missing variable is that it's a seller's market. So with everything that you're saying, I understand, but if it's a seller's market, the seller has more room because he potentially will have more people coming to purchase that home. So I'm trying to balance out the risk of having multiple offers versus
so like
one.
I see a lot of buyers want to actually and ready to pay and do less work. Like there are a lot of buyers who don't mind like paying just like to move in and they don't have to do anything. There are fewer buyers who would rather buy the property for the less price and do the work themselves.
Okay. Thank you.
You're welcome. You're welcome. So what other questions, guys, do you have? It's your time. We're available for you. So please ask us your questions. Okay, no questions. Chris, maybe like, would you like to add anything?
Well, yes, I would like to share, if I can share, I would like to share my screen for a quick moment here.
Sure.
I just want to kind of show you all just, you know, some of the data that you're seeing out there and in support of what we were speaking about. So let's take a look here. And you all let me know if once you see the screen is available.
Okay.
Okay. So it doesn't show I have access just yet, Julia. But
Let me see. What shall Chris, would you share your phone number with everyone?
yes, I'll leave my phone number here with you. My direct phone is area code 513, and I'll put it in the chat as well, but it's 513 area code. And then it's 532 and then 2189. So once again, it's 513 area code and then 532 2189. But feel free to call me anytime. And Julia, I don't know, I'm not able to get the screen share. I was going to show them just one quick thing that takes just about 30 seconds. Just in closing.
I don't know where this permission. Nothing is popping up for me.
Okay. Yeah, it does show disabled right on my screen as well. So it doesn't, it's not showing that I'm able to get through. But I was just really going to touch on the data that's out there online in terms of what's going on in the market, because, I was even reading online today on Forbes Advisor, and they're saying that, home prices have continued to surge despite higher mortgage rates. So what I'm just wanting to reiterate to everyone, I've been doing this 20 years, but not just relying on just my own opinion or expertise. We're looking at the facts and the factors out there. And it shows that even with rates rising currently, the prices have not went down. Median home price has jumped every month in 2022. So prices they have not declined, even with interest rates. And that just speaks to, like I said, the demand. So you really have to think about how that market is then going to react when rates do start to taper down, how that's going to have an effect on the market, because you do have a lot of people reluctant because of rates. But then when rates start to taper down, like I said, what do you think that effect is going to be on the everyday consumer?
Yeah.
People are going to come out certainly to buy. So I just wanted to reiterate that with some data that was out there on the web.
I know we're out of time, but I did have one question or even statement.
Yes, no problem.
I have 2 houses and my girlfriend has 3 houses. And every single day, several days a week, we have investors calling to try to buy properties. So it seems as though the market is being driven a lot by corporations trying to get a monopoly on prices, which in turn is going to affect the rental market, because you're going to have conglomerates owning all these properties, which in turn is going to drive up rent. Right. Are you seeing that, hearing that in your industry?
Oh, definitely. Oh, yeah. I mean, investors are certainly coming out of the woodwork. But you can go ahead, Julie.
I receive a lot of phone calls from investors on my listings, my personal properties and listings. But what I see, they're offering much less versus, like, if we go more with traditional approach, and we'll be targeting more like owner-occupant buyer who will pay more fair market value price. And I've noticed also that some of the bigger institutional investors, they kind of step down a little bit. They are not as actively buying as they used to be. I've heard that it is kind of like temporary thing for now. I think they will come back again. But some of the bigger institutional investors, hedge funds, they stopped buying. But like the smaller guys are still there, but the offers that I'm receiving are like 30, 40, 50% of the price. That really like offensive to the seller to even consider.
I want to buy it and hold it.
Right. Well, these investors understand the long-term play, and they know if you're awake right now and you're looking at this realistically, where home prices are going to go in the next 5 to 10 years is going to be insane. And it's why you need to get in now. I mean, and even I was just looking at more data that's out there today. So this says right here, inflation, high mortgage rates, and record high home prices are making it harder and harder to afford a home. That's likely not that it says, and that's likely not going to change anytime soon. Economists at Fannie Mae expect prices to be on average 16% higher in the coming quarter than they were a year ago. And that's in the coming next quarter, finishing off the end of the year. Economists also expect home price gains for the foreseeable future. They forecast a 9.8% yearly increase for home prices in 2022 compared to 2021, and a 2.8% gain in the coming year of 2023. It says housing inventory predictions. One of the biggest drivers of prices is inventory. If there aren't nearly enough homes for every buyer who wants one, like over the past few years, the housing market looks a bit like the Hunger Games. In the world of real estate agent Ann Fascone, the realtor in Chicago suburbs, now just as many buyers are starting to step back, and some sellers may be as well, as inventory was 26.6% higher than a year ago in August, according to Realtor.com. Now, less new inventory coming into the market tells us that some homeowners are hesitant to list due to higher mortgage rates, right? Because when they go to buy, they know that they're buying in a higher rate market. So what people have to understand is, even like I'm saying, this is like they say here, like it's like the Hunger Games. You're going to be in position over the next 5 years where buying a home is going to be just such a blessing. I mean, you're not going to be able to get in, and those who are already in are going to have the in, and they're going to gain tremendous equity in these homes, and that's why you're getting all of these investors that will even buy a lot of these homes overpriced right now, even if they have to, because they know what's going to come in the next 5 or 10 years. You know, home prices, people think they're soaring now. Wait till the next 5 or 10 years come around, because this supply and demand is just getting greater. You know, so it's going to really be a privilege to even be able to own a home, because even though you may be able to own it by your credit score and your parameters, you may be able to qualify. You're not going to be able to get in simply due to the bidding wars and the pricing. And that's going to be the issue going forward. So people really have to understand what's coming. You need to get in now. And, you know, if you can invest in several properties, you want to do that. But if nothing else, at least get your own primary home. Because if not, you're really going to miss the boat over these next 5 or 10 years on what's going to happen to these prices. You're going to miss out on a ton of money in your pocket. You know, so you really don't want to stop, you know, in terms of buying property.
Guys, I apologize, but let's wrap up, because I have a closing actually that already started at 1 o'clock. Everyone is waiting for me. I need to go.
Yeah.
Thank you very much, Chris, for participating. Thank you very much, everyone, for joining us today. I hope you found this information informative. So if you need to reach out to us and would like to ask one-on-one questions, and like for buyers or sellers, whatever you're looking for, Chris and I will be happy to help you. You have our contact information, so please feel free to reach out to us, and we certainly will be happy